Janet Yellen did take the first step in the confirmation process to become the next chair of the Federal Reserve. Current vice chair of the central bank sounded positively dovish about the Fed's easy money stimulus plans. She said the U.S. economy still needs the Fed's help. And that helped stocks today, but will it win over the support of lawmakers? That's the question. Hampton Pearson has more tonight.
At a Senate Banking Committee hearing on her nomination to become the first woman Fed president,
I do.
Janet Yellen strongly defended the central bank's economic stimulus policy, but gave no hints of when tapering might begin.
While there is no set time that we will decide to reduce the pace of our purchases, at each meeting we are attempting to assess whether or not the outlook is meeting the criterion that we've set out to begin to reduce the pace of purchases.
As Fed vice chairman, Yellen has been a key ally of Ben Bernanke in holding key short-term interest rates near zero since late 2008 and quadrupling the Fed's balance sheet to some $3.8 trillion, done with massive monthly bond purchases. The housing recovery and strong auto sales, she says, are prime examples of how the stimulus has benefited both Main Street and Wall Street.
We have seen interest rates fall very substantially. Lower interest rates, lower mortgage rates particularly, I think, have been instrumental in, it's not the only factor, but it has been a positive factor.
When asked about Fed regulation in the future of banks judged too big to fail, Yellen said as chairman, one of her highest priorities would be to reduce any advantages enjoyed by the nation's largest banks.
We have made progress in promoting a strong and stable financial system. But here, too, important work lies ahead. I'm committed to using the Fed's supervisory and regulatory role to reduce the threat of another financial crisis.
A senior aide tells me Yellen's strong performance today is paving the way for a full vote by the Senate Banking Committee early next week. The timetable for full Senate confirmation is still up in the air. For Nightly Business Report, I'm Hampton Pearson on Capitol Hill.
So what did investors learn today about what a Janet Yellen Fed could mean for the stock market? Joining us now to talk about that, Jeff Kleintop, Chief Market Strategist at LPL Financial. So, Jeff, what was the takeaway for investors here? It was a very civilized hearing. There was no fireworks. She gave assurances that the Fed is going to keep on stimulating the economy. Is this a buy signal for the markets?
Well, it's certainly good news in the sense that, she communicated that the Fed is going to remain friendly to the markets, meaning continuing this insurance policy the Fed has put in place through their bond buying program. At the same time, she acknowledged better growth in the private sector. So you almost have the best of both worlds. The Fed remaining in the background is to ensure against anything going wrong and continuing that stimulus, but at the same time, better economic momentum. Sounds like a recipe for continued gains in the stock market.
What about the bond market? The yields fell today. In fact, they fell last night when they first released her testimony to the Senate Banking Committee. And rates had been rising recently, expecting a tapering by the Fed sooner rather than later. Do you see yields going even further lower?
I think yields are in a range right now, and I don't think anything Janet said today is going to break them out of that. Clearly, we're coming up on this December Fed meeting about a month from now, a little bit more than a month from now, where they'll be deciding whether they're going to taper. I don't think they'll have enough information to do that. I think that's what we heard from Janet today, very much walking the same line Ben has said, which is it's data dependent, and we're just not sure yet. The bond market, interestingly, has not really, we haven't seen a dramatically steeper yield curve on the idea that Janet would be much easier in terms of monetary policy, risking longer-term inflation in the bond market. Instead, they see more continuation of Ben's policies.
But Jeff, at some point, this reducing the stimulus is going to happen, whether it's in March or later than that, it's going to happen. And a lot of experts have said it's going to be tricky. And today, Alan Greenspan was quoted as saying that for Yellen, she faces very daunting problems. So what could that mean for the markets? What could that mean for the economy in terms of something going wrong? It's going to be tough, right?
Absolutely. Communication is going to be key. And now that we know who the Fed chairman is going to be through the bulk of 2014, lends more credibility to the Fed's message on what they're going to do on QE. And that should ease the transition. Listen, you're right. There's no surprise that this is coming, a slowing down of these bond purchases. And as long as it's accompanied by better growth, should be good news for the stock market. But we only have to look back to the end of QE1 and QE2 to remember the knee-jerk reactions in the stock market, declines between 15 and 20% that accompanied those. Now, there were other background factors involved, but that's the knee-jerk reaction, and we have to keep that in the back of our minds here, even though we're much more braced and in a better position economically for this transition.
Very quickly,
so expect some volatility, but ultimately some gains for the year.
But I'm going to try and pin you down a little more than that. I mean, we're sitting here at all-time highs for the Dow and the S&P. Do you see us continuing higher even as the Fed continues to talk about no tapering right now?
Yes, I do. We believe here at LPL in the research department that we're going to see substantial gains, maybe even double-digit gains next year. But Bill, comes with a lot more volatility than we saw this year. Peak to trough decline this year, 5.7%, almost nothing. Expect double or triple that next year in terms of the peak to trough declines. Those are great opportunities for individual investors who have yet to embrace the stock market.
Well, that's quite a bullish forecast. Thanks a lot, Jeff, for coming on the program. Jeff Kleintop,
My pleasure.
Chief Market Strategist at LPL Financial. Thanks.